Hello, Oracles. Well, Tesla just released their earnings and they blew out expectations. This is awesome to see. Again, the question going into this earnings was going to be, has Tesla bottomed when it comes to margins? Well, we can't guarantee that because we still have time to go forward, but based upon the trends we have seen and based upon the numbers today, they have definitely bottomed and we have now climbed back out of this. So we'll get into some of those numbers in a minute. We'll get into some of what happened at the earnings call, some of the questions that Elon and Tesla team had answered. And then we're going to be discussing, am I going to change my investing strategy around Tesla going forward based upon these earnings? So before we get into it, please make sure you hit that like button down below, subscribe to the channel, helps build that algorithm and gets this out in front of more people's faces. All right, so looking at the numbers, so the EPS estimates were 60 cents. Tesla came in 20% higher at 72 cents, blowing those numbers out of the water when it came to EPS. So when you say, hey, we beat that, so that means that margins must be good. Well, they certainly were. So vehicle margins came in at 17.1% with an expectation of 14.9%. So that puts us back over that 15% mark. We're now climbing back up again. Again, we're a long ways away from that over 30% vehicle margin mark, but climbing back up in the jump that we did is huge. And now overall operating margins also climbed up significantly from 6.8% to 10.3%, back into those double digits. Now, when you're looking at other companies that are out there, legacy automotive, they range basically between 8 and 12% operating margins. So Tesla now pushing back up above there. Now, Tesla had been blowing all these companies out of the water previously, putting out numbers that were closer to tech numbers that were out there. And of course, with the higher interest rates, they came way down. Pushing back up out of this, again, is a great sign because realistically, the interest rate cuts have not been in effect on Tesla yet. But what we can see are all the financial deals that Tesla had been doing when it comes to financing are actually making a huge difference. So what's going to end up happening over time is as interest rates do come down, Tesla's not going to have to do those as much, or if they do choose to do them, it's going to cost them less in the long run. So they will be able to keep more money on the bottom line as well, which will boost up margins even more. So when you're looking at vehicle margins jumping up as much as they did, why did they jump this high? Well, one of the charts that Tesla put out shows that their vehicle cost came down significantly. They had been hovering around that $35,000 to $36,000 mark for a very long time. They're now down just under $32,000 per vehicle on a cost basis. So that's huge because now they're making even more margin on each one of these vehicles. So this is now going to give them that pricing power back again. They had pricing power going through 2021 and 2022 that was unstoppable, unbelievable pricing power. Then interest rates went up and they lost all of that pricing power entirely. So they're starting to gain some of that back. And a lot of that is coming from their own fundamentals by cutting the cost of the vehicles. Then when the macro environment fundamentals of the interest rates coming down really start to kick in, that's going to help them out even more. So now we start to look forward as to, well, what is next year going to look like? These numbers are looking good. We've seen some really good numbers coming out of China when it comes to deliveries for the insured vehicles. So we can just guess that Q4 is going to look pretty solid. Q4 obviously is usually the stronger push to get to the end of the year. They might actually make it over 1.8 million vehicles for deliveries for the entire year. We'll see if that actually comes to fruition. But realistically, it's not about how many vehicles are sold, it's how much money they're making at the end of the day. We do want to see the vehicle growth obviously happening because that's where they're getting the majority of their revenue. But if we are seeing them making even more money on each vehicle, they don't need to have as many vehicles delivered to make that much money. And then on top of that, they also announced that the Cybertruck is also profitable. In less than 1 year, the Cybertruck is now a profitable vehicle, which is crazy to think about based upon how much it costs to make the vehicle itself. And they had to go through the entire ramp phase, and the entire ramp phase is expensive. So the fact that they've already put the Cybertruck at profitable right now really gives us a lot of good hope for next year when they come out with this lower priced vehicle. So we'll get into that in a minute as well, because they did mention that. So looking at these numbers here, the numbers are outstanding. Everything across the board is looking very strong, very healthy. Strong EPS, great margins, great revenues coming in. They are looking very, very good when it comes to their balance sheet. They added cash to their bottom line. Free cash flow is over $3 billion again. Phenomenal news coming out of this earnings report. So this, again, I think does give us that signal that Tesla has bottomed when it comes to margins. Now, when we start looking forward, you can say, all right, well, if they're going to be coming out with the next generation platform vehicle, Typically, we know full well that a new vehicle launch and a ramp are going to be cost intensive, and these are going to bring down margins because that's how it always goes. But when they were talking about this on the earnings call, they were discussing how it's something that they had discussed in the past, and we've discussed it on here as well. It's an entirely new manufacturing process. That process itself is going to be extremely more streamlined, much more cost effective, and they're going to be able to pump out many more vehicles at a lot faster rate. So they're going to get to volume production a lot faster. So when we're looking at the Cybertruck already getting to profitability, getting this new next generation platform vehicle to profitability should be very, very fast. So we could probably see that happen within 6 months, especially considering the vehicle that they're going to be putting out is going to be a mass product vehicle, is going to be a mass volume vehicle that is going to have a lot of demand. So they're going to need the production to be super fast. And again, we want to make sure they're preventing the Osborne effect. So when they do end up coming out this, they're already confident that production is going to be so fast, they're not going to be losing sales on the Model 3 and the Model Y without being able to recoup that money with this new next generation platform vehicle coming out. So the production, they're confident that they're going to be able to produce that many to be able to offset any sales that they lose from the Model 3 and the Model Y. Elon did say on the earnings call that his best guess is that they are going to be seeing 20 to 30% increase in deliveries next year. That, of course, has to do with that next generation platform vehicle. And one of the questions on the call had come over asking about, the next generation vehicle that's going to be coming out next year. Is that going to be tying in line with all their AI projects in the cyber cab? And Elon said it's basically the same thing. It is the cyber cab. It's just all of it's the same. It's all going to be on the same footprint and that production line. And again, I had mentioned it last night. This is what the production is going to be. It's basically going to be like a skateboard, and the skateboard gets put down, and you just slap whatever cover you want on this thing, and you push it out. And it's almost like putting together like a Matchbox car. You've got the bottom, you got the top, clack, just click it on, and you're done, and you move forward. That's very much what this production process is going to be, just on a much bigger scale. And so you're going to see these vehicles coming out much faster than you did before. So this vehicle is going to come out initially next year. So they kind of just kept on talking about how it's really just going to be the Cybercab coming out next year. And they did say the Cybercab is going to be in volume production in 2026. But again, they are talking about this lower priced vehicle. They said the cost of it should be about $25,000. Now, that was the Cybercab. You start putting in pedals and steering wheel and things like that, probably push it up a couple $1,000s more, but that's still well below the $32,000 cost that they have of the other vehicles right now. But they never really confirmed, yes, it's going to have the steering wheel and pedals. They kept on kind of dancing around that. But realistically, that is probably what the vehicle is going to be coming out next year, because again, they don't want to completely confirm all of that, because then they're going to be cannibalizing the 3 and the Y. But sounds like first half of next year, this is going to be coming into production. They are confident that they're going to be putting this up to volume production by the end of that year. The production ramp is going to be extremely fast. But again, it's the new production platform on this. So there could be some hiccups along the way. So just brace yourself in case something like that does end up happening. But that is going to be massive numbers for next year. So when you're starting to look at margin numbers and say, are they going to be taking a margin hit on this? Maybe initially they'll take a little bit, but if we're seeing a 17.1% right now, could be pushing up to maybe a 19% going into Q4. That means that going to Q1, they probably won't have those vehicles up and produced yet. Maybe they have some produced kind of on the down low and kind of secret. Maybe they push over 20% margins before this vehicle comes out. And then that vehicle comes out and brings us down for maybe a quarter before we go up from there. Again, a lot can happen between now and then. That's just my best guess estimate based upon the information that we have at hand right now. But it does look like we are moving up in the right direction when it comes to Tesla's margins, and it looks like we are starting to climb out of this basement. And now Elon did say about the Cybercab that they're looking to be producing 2 million per year of this vehicle alone. Putting that into perspective, right now we don't even have 2 million vehicles getting produced in a year when it comes to all of their models. So this one model alone will be 2 million. So that is absolutely incredible to think about, that we're going to see in 1 year from one vehicle what we now see collectively from all of the vehicles. Now, we had also discussed this in the past as well, that once they do come out with this lower priced vehicle, the production on this and the deliveries and demand on it are going to be just that. It's going to completely eclipse all of the other vehicles combined and take over all on its own. Now, you're still going to see obviously great sales coming from the 3 and the Y, the Cybertruck, and all of that. But this new one, because it's going to be so mass accessible to everyone out there, it's going to really just kind of blow everything out of the water. And so then getting into some of the questions that they had on the call, they were relatively transparent about a lot of this. Again, it was a lot of more future thinking, but for the first time that we've seen in a long time, Elon talked and the stock went up. And of course, it went up because he did confirm at that time that we are going to be seeing that lower priced vehicle and we're going to see that 20 to 30% increase in deliveries next year. So, based upon those two numbers, that pushed the stock even higher. Before the earnings call started, we were up about 6%. By the time we ended, we were up about 11%. And at the time of this recording, we're up almost 12%. So, obviously, everything went well. The earnings went well. The earnings call went well. And then some of the questions that they were talking about, they talked about the semi truck saying, it's kind of more of everybody who gets into one and drives one loves it. But it's kind of like we're looking at 2026 realistically to really kind of get that up and running when it comes to Nevada and moving kind of that whole factory forward there, which is fine. And they're building up the battery. The battery production has been strong, but Elon did say that they're obviously still going to be using a lot of partnerships and other manufacturers when it comes to the batteries because they still don't have enough themselves to be produced to take care of all of their vehicle needs. And one thing that may have been a little disappointing to some of the Tesla owners that are out there was about Hardware 3 being able to get to level 5 autonomy. And they kind of said, they're not sure. They're working on the Hardware 4 stuff because they know that that is capable of taking on what they're trying to accomplish right now when it comes to FSD, but they're truly not sure. And that's kind of disappointing because Elon did say previously that that would be good enough, but based upon all the things that they have found out, it may not be. But they did come through and say they'll do free upgrades on all of them as well to make sure that they can get there. And that's going to be huge. So, at least they're going to back it up and say, hey, we were under the impression that Hardware 3 would have been able to. It's not, but we will upgrade you for free to be able to make sure that you are able to use your vehicle as a robotaxi or whatever you want to use in the future. So good to hear them back that up as well. So anybody who was disappointed may not be because, hey, they'll get a free upgrade when it comes to the hardware, which is awesome. So overall, earnings call, absolutely awesome. The earnings report itself, absolutely awesome. This one here kind of gave me that new hope again when it came to Tesla. And again, I never lost hope. I just shifted away because I saw that they were going through some dark times and wanted to put my money in other areas for different reasons. So is this going to change my investing thesis for Tesla? Slightly, not entirely. What I'm going to end up doing is based upon my entire portfolio and how I've broken down on the levels that I want to have certain stocks at. I'm moving Tesla up into the category with my dividend growth stocks, despite the fact that Tesla doesn't pay a dividend. I want to add more money to that. I'm going to move Tesla, Amazon, SoFi, and Palantir into that category. So it's now going to match all of my dividend growth stock levels. So I'll be adding significantly more money to those stocks in the very near future. So as I'm moving up, I need to add a little bit more to cash, but I will be bumping those up significantly. When you look at the entire market from a macro perspective, which again, don't forget, Tesla is susceptible to moving with the macro environment. Right now, the macro environment is an extreme greed. So not to say that we're due for a sell-off, but historically, when you get to extreme greed, you typically get a bit of a correction from there. Now, not to say that we're going to have a market crash or anything, but it'll sell off quite a bit. Now, Tesla's RSI is conversely down at 36 before we had the earnings call. That is pretty close to oversold. So we've seen it in the past where the entire market sells off quite a bit, but Tesla kind of goes against the grain and goes the other way. So it's like a lot of that money that's coming out of all those other stocks end up going into Tesla. Will we see that happen again this time? Nobody knows until it actually happens. So we'll pay attention to that. But just looking how it's moving going forward, I still think that we have a lot of economic issues that we've got to deal with on a macro scale. So even if Tesla goes up from here, pushes up, I think we're going to be testing that $236 level. And then if we can break through that, we can push up to maybe 260 again. Just kind of paying attention to where we're going to go from here, see how the macro environment handles it. I'm going to follow my levels, but as I follow my levels up, if we do end up getting that recession next year, Tesla will most likely end up selling off with everything else, which is completely understandable and to be totally expected. But because my levels will be higher, that means I'll be able to add a lot more at a lot cheaper price for Tesla stock. Again, that's a lot to happen between now and then. That whole thing could be playing out around the exact same time that we end up getting this lower priced vehicle coming out, which I've mentioned many times in the past, could be perfect timing for Tesla. Because if we get into a recession, people aren't going to have the money to buy a Model 3 or a Model Y, even with all the prices coming down, but they might actually be able to purchase a $25,000 vehicle or this compact car. So that could be very viable, and that could help Tesla get through a very difficult economic time when it comes to the macro environment. So again, just things to pay attention to. But as far as the near term goes, awesome earnings. I think we're going to move up a little bit more from here. Test that 236, push up to potentially 260 if we break that 236. And then I'm just watching the macro environment over the next week and a half heading into the election. So that's all I've got for you guys. Let me know in the comments below how you felt about these earnings. Don't forget to hit that like button down below, subscribe to the channel. Thank you so much for watching. I appreciate all of the support. Have a great one.